Let's try and unpack all this. Kranthi Bathini from Wealthmills Securities joins us this morning. As an equity strategist, Kranthi, just tell us, what is the strategy for IT stocks? I know we have been discussing IT stocks for the longest time, but the kind of cuts that we are seeing now with all the AI disruptions pretty much seems unprecedented. These are uncharted waters for long-term investors who are betting on what were once called these blue chip stocks.
Yes, Kartik, absolutely. You are correct. The IT stocks are in a corrective phase and they are going through the turbulent phase from the past 1 year, various reasons. But the current reason for the downtrend in these IT stocks is completely unwarranted. And one thing is we need to agree that our IT companies in the past few years, they could not able to change their business models and adapt to the new changes that are coming in the businesses. So that's where our Indian IT companies are facing this heat in the global markets at this point of time. But by and large, the companies, how fast they could able to change their business models, how they are adaptable, and how fast. These are the things extremely crucial for these IT companies in the medium to short term. But given the kind of the long track record these companies faced in the past 25 years, different kind of turbulent times these companies faced. But is this time is different? Definitely this time is different. But how fast they could able to change the business models and adaptable to the disruptions that are coming in the way, that can make them to sustain. Otherwise, they are poised for a very challenging times in the coming future.
Right, Kranthi. But the embracing or the sort of delay in embracing IT, AI as a new tool and as a new way of doing business could be the reason for Indian IT stocks to fall. But the broader sell-off that we are seeing, even in AI-first companies in the US, for example, I'm looking at NASDAQ-listed stocks, the kind of sell-off that we are seeing even in AI-first companies in the US, the likes of Apple, Google, Microsoft, Meta, Amazon, all of this pointing to the direction that even AI-first companies are finding it hard to cope in this ever-advancing world of artificial intelligence.
Yes, Karthik, these stocks are rallied a lot. Look at the charts of these stocks, how they rallied in the name of AI in the last few years. And within the AI, there is a disruption is taking place. So overall, the valuations look stretched for these AI companies in the US markets are concerned. And we are witnessing the same kind of impact on Indian IT companies by and large, as there is a tech turmoil is taking place in the entire global markets. By and large, look at the Indian IT companies. Last 5 years, they have been sitting on the cash, but we have not witnessed a majority of the companies doing any kind of acquisitions in the form of AI. They are a little bit complacent, and now the game rule is how they are going to adaptable to the change and upskilling their employees. It is extremely crucial for Indian IT companies going ahead.
Isn't it some sort of a chicken and egg situation, a catch-22 situation one would call for, for IT companies and tech companies right now? Because you make two heavy investments in artificial intelligence. Investors want to know when our return's going to come. And if you sit on a cash pile, you say, why are you too late in innovating?
Absolutely. That's what the technology companies are there. We witnessed in the TMT bubble in 1995 and 2000 YTK kind of a thing. There are a lot of disruptions that do takes place, but by and large, our bellwether companies, you are calling as a blue chip, people are a little bit hesitant to say blue chip, but
Yeah.
we can call them as bellwether companies. But these bellwether companies in the past 20, 25 years, they could able to weather different kind of storms. It can be 2008, the GFC, Great Financial Crisis,
Yeah.
GFC, and they also weathered through the recent COVID crisis. But this is an inherent risk that is originating in the technology path. So whether the Indian IT companies could able to weather these turbulent times, everybody crosses their fingers. But I can sense Indian IT companies would be adaptable in the coming times and coming quarters. And And as a contrarian view, one can take and look at these companies. They have strong cash reserves,
Yeah.
and the leaderships are good, and they are in a wait and watch mode at this point of time. But they cannot be in a wait and watch mode. This is the time to take crucial decisions.
Okay, time to take crucial decisions. Wait and watch mode may not last forever and serve them well. Same set of advice even for retail investors. Should they also wait and watch and see how this IT story pans out, or take decisive action on their holdings? Because, one would call it that perhaps, cut your losses already, get out of the IT space, or use the opportunity and buy on dips. So what would be your recommendation to retail investors?
Karthik, going ahead, what I can sense at this point of time is there would be a moderation in the PE ratios. Given the kind of uncertainty looming around these IT companies, around their business models are concerned, so we can see some kind of a moderation in the PE, because these companies are already trading at below their historical PE levels are concerned. So investors, if they have high risk appetite at this point of time, and given the kind of uncertainty looming around this sector, uh, one can buy in a very staggered manner for a medium to long term. Otherwise, there are much better sectors at this point of time. Look at Indian defense and the new sunrise sectors. Those are emerging in India, like the nuclear power. Or look at the sectors like aerospace industry, or the sectors like the semiconductors. They looks very attractive. The risk reward ratio is much favorable than IT at this point of time, in terms of the selection of sectors are concerned.
All right. So deselect IT and select more emerging sectors which are likely to yield better dividends is the word coming in from Kranthi Bathini as far as IT stocks are concerned. But Kranthi, I want to also draw your attention to the kind of sell-off that we are seeing in non-energy mineral, steel, aluminium, cement this morning. What seems to be the story there? Hindalco is down about 5%, Tata Steel, JSW Steel. Tata Steel almost 2% now, JSW Steel also down about 1.6%. What exactly is happening in the metal segment right now?
Karthik, the setup is buy on dips, sell on rallies, and the metal pack has one of the outperformer in the recent past. Last 1 year, we witnessed how the astronomical rise in silver and gold, and also the copper and the base metals are concerned. So we are witnessing some kind of a profit booking in these companies, and majority of the companies what we are discussing, they rallied and they are outperformers in the last 1 year. So some kind of a profit booking these stocks have been witnessing right now.
All right. Also talk to us, you had mentioned the defense sector, but talk to us largely about the entire electronics technology space, because defense, I think the name that really pops up is HAL, and HAL has been performing well despite news around the AMCA project not really coming for HAL. And even if it does, the projections that it is making are unlikely, to be very strong given the kind of delays that we've seen with the Tejas project. But outside of HAL as well, if you look at stocks of BEL or, even Power India, ABB, which used to be called earlier, and the larger Make in India stocks like Dixon, all of these are also seeing some sort of a heavy selling this morning. Dixon is down about 2.4% or so. This was one of the success stories of Make in India, wasn't it?
Yes, Karthik, these stocks have rallied a lot in the past couple of years. So now the market setup and sentiment is buy on dips and sell on rally kind of a market at this point of time. As Nifty is not able to hold the range of 26,000 level, and below this range, we are witnessing some kind of a profit booking. Until unless market stands above 26,000 level, we will see these kind of a pullback rallies. Look at the last 1 year, the markets is in a zigzag mode. We are discussing here and there, but the setup of the market at this point of time, we are witnessing some kind of a long consolidation in the market. Until unless we get a strong earnings upgrade in the large cap space, the markets, the indices and headline indices stocks are going to be in a consolidation phase in the medium to short term.
And that consolidation visible on your screens as well. Right now, as we speak, Sensex and Nifty are both down about 1% or so each. That's a massive sell-off. In fact, Nifty 50 is down about 265 points. And let's also pull up the Sensex figure. The latest Sensex figure is also reflecting that Sensex has already lost in just the first 15 minutes or so of trading, 20 minutes or so of trading. Now, Sensex has lost about 825 points from yesterday's already low closing level. Well, let's see which direction the markets take from here. But Kranthi, Bathini, for your time this morning, thank you so much for joining us.
Always.